All right, what's going on, everyone? Welcome to Stocks and Coffee, as usual. Give me a little shout out here. Let's see who you are, where you're from, and what you're drinking. Tim knows the drill here. He's got his Green Mountain Dark Magic in Chicago. Rahul, what's going on? Alex in LA drinking Dark Lavazza. Michelle, what's going on? From Sacramento, Eric from Indiana, uh, uh, Freddie, what's going on? Good morning. Janelle from Orlando's got her Starbucks. A lot to talk about today. It was a big week, and it's always nice to have the Fed meeting over. So we'll talk a little about that, what went on in the Fed meeting, a little review here for those of you who are swing report members, because we actually watched this live and went over it. And I think what we were expecting has kind of played out here. We're going to talk a little about some interesting developments related to market breadth and the overall market that might not be showing up in the indexes. A really quick industry analysis, and maybe we'll do some stock picking in there in terms of some of the surprisingly hot industries right now, which is much different than the early in the year or much of the year. A few of the setups that we're watching that are in play right now. So that's really important as a swing trader, is not to just look for one or two setups, because although we have these great setups that have been tested and they work, there are certain setups that tend to work better in different markets, in different environments. So, it's kind of like, you got the tool belt. If you're working on something, you're going to pull out the right tool, right? Whether it's a screwdriver or a hammer. If you're trying to nail something, your screwdriver is not going to work, even though it's a great tool. And same goes for setups. You have to be able to pull up the right setups at the right time. So we'll just quickly talk about a few that are in play right now for us. Then, of course, our stock watch. We'll do a little big tech review, and we should be able to get through this pretty quick so we can get on with our weekend. Let's see, we're Christian. What's going on? Christian is in downtown San Diego, only about 15 minutes from me. We've got Timothy in Chicago. Too hot for coffee today. Yeah, I have to have it. No matter how hot it is, I got to drink my coffee. Good morning. Good morning, Dennis, my buddy in San Diego drinking Pete's. Steve in Boston. Richard, what's going on? I don't know if I can shout out everyone here. We got to get started here, but thanks for everyone for showing up here. We got a good turnout. Dan from Raleigh. All right. And TC is drinking Celsius Tropical Vibe. All right, that might be good for when it's hot outside. All right, let's get to it. Let's talk about the market. First, really quick Fed recap. We could go deep into this. What was really said, get some quotations out. But what we really need to know right now related to the market is one. We were looking essentially going into the Fed for one of basically three things. Either the Fed was going to be kind of a nothing burger where they don't say much, and a lot of these end up like that. And then the market is just happy to get it out of the way and resumes what it's already been doing. Kind of like that this time, but maybe there's some nuances that we have to pay attention to. The other thing is, how was the Fed going to react to inflation, the inflation numbers versus the job numbers? And that has a big impact on what they're going to do. If they indicate they're going to be more they can only really focus on one or the other. So if they're really focused on inflation, that means, obviously they're trying to keep inflation down. They're concerned about inflation, and that means it's not likely they're going to cut rates very soon. If they're more focused on jobs and the health of the economy, then they want to cut rates. So which one takes precedence? And going up into this Fed meeting, they just kept saying they weren't really giving a great indication. They mentioned both, but not which way they were leaning. But they did give an indication this time. And the indication was they're more focused on inflation. They're more concerned with inflation. If jobs take a little bit of a hit, they take a little bit of a hit. So that was that hawkish tone we're talking about, where they didn't come out and say, get very aggressive on it, but they did allude to that. So that's something to pay attention to now that we got an indication more concerned with inflation. GDP and inflation numbers, not as good as expected, and they mentioned that. So that again is that hawkish tone, a little bit concerning. And then going into the meeting, both Trump and Vance were really pushing the Fed to cut rates, and you know they pretty much indicated that they're going to ignore that. At least that's what they're saying. And then there is, we didn't put it in here, but this does relate again, maybe a little bit to the hawkish tone, and that is the dot plot. And what the dot plot is, it's basically a representation of all of the different Fed members and what they, each one of these, while we get a Fed decision, each one of these have their own ideals, and we can get a good representation of that in the dot plot. The dot plot basically coming into this meeting indicated, if you just average out what all of these guys are saying, that there's is an expectation for 2 rate cuts by the end of the year, and that did not change. It was still at 2 rate cuts, so that was good. There, you know, if it would have changed to 1 rate cut, that would have been concerning. But a couple of caveats to that. One is, and you know, these things really, at the end of the day, they're meaningless because they don't always do what the dot plot says they're going to do, and we've seen that a bunch of times now since the pandemic over the last 5 years. But the market pays attention to this, so because it gives an idea of where their heads are at. But what was interesting is the two stayed for 2025, but they did not stay for 2026 and 2027. I think even the market takes that part with a grain of salt, because who knows what's going to happen 2026, 2027. A lot of stuff changes, right? But it does again indicate a little bit of that hawkish tone. So there was that as well. There was another key kind of element that came out of the dot plot. That was, even though the rate cuts for 2025 are listed as 2, that's an average of everyone. 7 of the, I think it's 15 members, want no cuts, and that kind of tells you there's a lot of volatility and division between the members themselves. They're not all kind of in unison. It's not like everyone wants 2. Some want a lot, and some want none, and that's maybe a little bit concerning as well. So out of all that, we get maybe a slightly negative Fed meeting, which most of them have been recently, have been just kind of nothing. This one might have been slight. What isn't, you know, a really negative one where they come out and the dot plot changes and they say we're not going to do 2, or if they had raised rates, obviously that didn't happen. So it wasn't very kind of negative or bearish. We'll say slightly on this, and there wasn't a huge reaction on Wednesday, and then of course Thursday was market closed. But Friday, we saw, even though it doesn't look that big on the chart, I've got the weekly chart out. There was something I want to point out here, but let's get to the daily real quick. And you can see here, not a huge move, but what is significant, we broke this range here, went under the 9 EMA, and maybe because of the Fed meeting now, we get some maybe a now. We don't have to worry about it for a while, and then we get the remount of the 9 EMA. The Fed minutes will be released, I think, in about 3 weeks. In the Fed minutes, we'll see exactly what was said behind closed doors with all these members. Sometimes the market will react to that even more than the actual meeting release. So, but we have some time right now, and maybe the market will just be happy about that, and we'll get right back on trend. So that was basically the Fed meeting. We see where we are in terms of the market. And let's talk a little bit about the market and market breadth. And as usual, if you guys have any questions or any commentary, post them in the chat here. But if we look at the overall market first, let's just pull this thing out. And of course, we're more concerned about the near term. But if we pull this thing out, it's been a very strong market. We know ever since essentially this big tariff kind of pullback, the market has ramped up near all-time highs. So overall, obviously a very healthy market, very bullish market, in an uptrend. We're getting this consolidation phase, which is not surprising when we're about to test a high and have made one of these big runs. So even though it feels like this last week was maybe a little concerning or boring here. We're just consolidation. We're not running up, and maybe Friday's candle a little concerning. Overall, very healthy market. And I was pulling up the weekly here because I want to point that when the market tests a new high, there often is some consolidation or even a pullback. We saw it, a really good example here, and a kind of a similar market, maybe not as extreme, about half the move of the pandemic rundown. But we see we had this big pandemic rundown and then the big run up, just like we're having a big run up now. When we tested the high, notice we broke out, but then we failed the high and pulled back some before starting to run. And if you go back and look at the high test, here was another one in 2018-19, where here was a high, tested the high, maybe broke out a little bit, but then pulled back, broke down below that high for a few months, and then ran up higher. That doesn't happen every time. We see here, we had in 2023, we had a high break, and the market just so it's not a guarantee that we're going to hit that high and maybe fail or pull back, but that's something to look out for. There's often, when a major all-time high breaks, there's a tendency to get very excited. You'll see it in commentary on CNBC and whatnot. A lot of people will jump into the market, and then it fails at that point. So I would caution if we do get the high breakout and it seems very strong, trade it, take some positions, but don't get overly aggressive. Wait and see. There's always other opportunities as the market starts to run, but watch out for that failed high, and we're getting close to that spot right now. Okay, going back to market breadth, what was interesting on Friday, and I would say much of last week, is even though the market was consolidating, and then Friday we got the pullback, not a huge pullback, 0.5%, but again, a little bit significant because one, maybe there's continuation Monday, Tuesday related to the Fed. Two, it broke this range and below the 9 EMA. But what was interesting is market breadth was relatively strong. So if you look at here, RSP, again, SPY, most of you guys know this now by now. SPY is not equally weighted. Top 10 holdings make up about 35% of SPY. Apple and Tesla alone make up a big chunk for two stocks, 3%, when they should all be worth, what, 0.2 if you took all 500, right? But RSP equally weights them, and that gives us a good understanding of the entire S&P 500. Whereas when we look at SPY, it's so much influenced by those top 10 holdings. A lot of that is big tech. But RSP, again, equally weights it. All these guys, BLDR, KR, KMX, MDLZ, and so on, Lennar, Para, all of these are equally weighted to the Apples, the Teslas, the Googles, and so on. And if we see that, it was actually green on Friday. And overall, the pattern is a little bit stronger here. So I would say that's a positive indicator related to market breadth in this pullback. And you always want to watch these during consolidations, during pullbacks. You want to see the health overall. Is this just a standard natural pullback that every uptrend has? There has to be some areas of consolidation, profit taking, digestion kind of thing, or is it a pullback that's more concerning and leading to maybe a short-term bearish market or a deeper pullback? And so RSP here is indicating that this is pretty healthy here. And if we actually pull up SPY now and we just look at the stocks, the market was down 0.5%. If the market's down 0.5%, my expectation would be that maybe 20-25% of the stocks are green on that day, because the market overall, 0.5% red. It shouldn't be 50% green, but that is what we saw on Friday. 295 out of the 500 stocks were green. So about 30% of the S&P 500. No, it's not 30%. Sorry. What would that be? 50 something percent of the S&P 500 was green on Friday when the market was down 0.5%. So again, a positive indication there. And that also explains why RSP was green. If we look at another indicator we like, T2108, stocks above their 40-day moving averages, we see it's holding up very well here overall. Made kind of a high, has pulled back some, but no big, real kind of deep pullback here. So that's a good indication as well. And just if we look at the universe of stocks that we're watching and trading, the overall patterns look pretty healthy. There are some more speculative ETFs we can look at, and you can see IGV is strong overall. This is software stocks. You can see here, maybe obviously Friday's candle a little concerning, but overall healthy. ARK, which is a very speculative tech ETF, you can see here was green on Friday and has been very strong. So, so far, this could change next week, but so far, not too concerning, this pullback. It's one of these pullbacks where we watch, and now we look for indications of continuation. Market breadth, I would say, is pretty healthy right now. If you look at the Qs here, overall testing highs, IWM, which is small and mid caps, you can see here, tested the 200-day moving average, has pulled back some, but still overall very healthy. This looks like a natural pullback on a big run up, which is what we expect, especially at a resistance level. So our market analysis so far is maybe a little bit of caution short term until we see what the market is going to do related to the Fed. We always say the Fed decision is always a release is always on a Wednesday. By the next Monday or Tuesday, we have a good idea of how the market really has analyzed the Fed. Maybe Wednesday this week, because we had the day off on Thursday and Friday was the first reaction to that. But by early next week, we should have a good idea. And market breadth so far is telling us that we still like the market and expect continuation. We expect a test of the highs here at some point. All right, so that's our market analysis. Let's quickly look at some of the industries. Before I do that, I see some of you have commented here, so let's see what you guys have any questions. Rahul, we're going to do it. We'll look at big tech stocks, so we'll look at Tesla. Yeah, they have the big robo taxi news coming up. And we are going to look at CRWV. CRCL is not on my, let me write this one down so I don't forget. I don't think CRCL is on my radar. Joy is asking, not sure if you've addressed this earlier in the week, but are you concerned at all about potential black swan events like the U.S. entering the Iran Israel conflict? That's obviously something to pay attention to, and we've talked about Mideast tensions and paying attention to that. So far, the market hasn't really cared, and I think part of it is we've been through this so many times now that the market gets desensitized to it. Over the last probably what is it now 3 years? There were as big tensions related to Ukraine and Russia, and then there was China, Taiwan, and over I don't know how long it's been now with the Mideast. But I think the market is kind of desensitized to that. Even Trump's strong talk this last week related to that, I would have in the past I would have expected that to shake the market, and it didn't at all. Maybe the market's consolidating some, but obviously there are things that could happen that could impact the market. I would say if that does happen, watch that very closely, and if there is a big dip, and we've seen this many times in the past, use that as a potential buying opportunity when the market gets overextended. Not right away, but if that were to happen, take that dip, watch for like a capitulation event, and then get aggressive. And that's exactly what we did with the tariff talk. That's a different, maybe a little bit of different thing, a trade war instead of an actual war. But kind of the same concept will happen in the market. So I would say don't be afraid of it. Afraid what you're seeing right now, but just manage your risk tight. We talk about some option strategies that you can use to manage your risk as well and hedge a little bit if you're concerned. We'll look at TSM. Daniel, I do like TSM. That's Taiwan Semiconductor. A lot of the semiconductors are strong right now. John's asking, what's your favorite fundamental analysis for short squeeze? Basically, I wouldn't say fundamental analysis. Look for stocks that are heavily shorted. What John's asking is, what do you like to see for a short squeeze? I keep a list of stocks that are heavily shorted. I keep a bunch of lists here, but you can see down here, somewhere in here is here. I call it the So I keep a list, and I also have high short interest here. They're essentially the same. I don't know why I have two lists, but they're essentially the same thing. Um, and that is stocks that are heavily shorted. I look at them in one of two ways. Some that are really crummy stocks, and I don't care. I'll still put them on the list. And the other is stocks that I think are very good stocks, but for whatever reason, people are shorting them. A lot of times, it's because they're very extended. But keep track those short squeeze stocks, and then you have to wait for the news event. Otherwise, sometimes you'll just be sitting on that stock forever. But when that news event comes, you can jump in because then there's the opportunity for short squeeze. The stocks that are really crummy stocks, eventually they're going to come back to where they were usually, but they're the ones that can squeeze a lot because so many people are betting against them, and then good news comes, and obviously they start covering, and you get this big short squeeze. Um, Daniel is asking about the nuclear energy plays. I like them, and as you can see here, we're going to talk about them in a second. You guys are all really on top of all the stuff we're going to talk about. That's good. Daniel here, you can see Oklo, CEG, and VST are on the stock watch right now, and I'll talk about that in a second. All right, let's take a look at our industry analysis now. What I've done is I've taken the industry indexes in TC2000 here. If you don't have TC2000, you can go into FinViz and go into their groups, and you can do something very similar and sort them by month or days. I've sorted them by the last 5 days here. We always look at the 30-day. That's kind of the sweet spot. And there hasn't been a huge change between the 30 and the 5. Now let's just look at the 5. These are some areas we want to be paying attention to. Notice if we look at the top, I really usually like to look at the top 20 and the bottom 20. But notice here, much of the year, what was really in play was speculative tech, some of the speculative retail, and then, of course, just tech in general. Notice if we look at the top 20 right now, we don't see much tech in here. We see grocery stores, farm products, and that's not surprising when commodities are moving. Farm, grocery, those are going to do well. Oil and gas, this is a lot of commodity related stuff. Education and training, this is usually related to China, a bunch of Chinese education companies. I honestly don't know a lot about them, but I'll trade them if they're moving. And here it is, utilities. That's what Daniel was talking. Utilities, very strong. That's even though that's not tech, right now we're kind of considering it as tech because nuclear energy is moving related to AI and quantum computing because they take so much power. And that's why this is so strong. We talked about this, I think we've talked about a lot in the swing report, but also here in Stocks and Coffee. We've talked a lot about we have these areas that are in play that we know are going to be trends for years, and that is quantum computing and AI. What we don't know is which of these companies are actually going to end up succeeding and which will fall by the wayside. We saw this during the internet boom, during different tech booms, that you get a bunch of these companies in the space, a lot of them run, and by the end of it, there's only two or three that seem to be in each like subcategory that end up leading, and the others all fall by the wayside. So we can play those quantum computing and AI plays, but some of the stocks that will really run are the kind of we can call like indirect or backbone plays. So with AI and quantum computing, that would be some of the kind of hardware and software behind it, and of course energy. If you think back to the railroads, that was like the tech of the 1800s. Of course, there were the railroad plays, but there was this steel, and we can think of steel as our semiconductors now. For this, that's kind of comparable, right? Laying the tracks, kind of, and that's what semiconductors do for AI. And then, of course, there was coal and energy type plays for the railroads, and some of those companies were stronger than the railroads themselves. And we can see that now with some of these energy plays are stronger, much stronger than the AI plays right now or the quantum computing plays right now. So we definitely should be paying attention to energy, utilities, and so on. And we can see that's really strong. This used to be a very boring area, and now it's essentially a momentum leader. Financial data, broadcasting. This is one area kind of related to media and tech that has been very strong. That's why Netflix is leading. Netflix and Meta are leading. The big tech companies publishing here, same thing. Ag. So you see not a lot of tech. It's a lot of energy, Especially finance. Some of the finance areas have been strong as well. And then we get into luxury goods and so on. Maybe some of the retail has been starting to pick up. All right. So that's kind of where we are in terms of what some of the areas we should be looking at industry wise. And what I always do before every week, I do my industry analysis. And you can see here, I have a bunch of different watch lists. My main watch lists are the big watch list is the alpha watch list. This has usually around 300 stocks. And this is coming, a lot of it is coming from the industry analysis we do. So we kind of identified here some of the strong industries. Obviously, we want to be paying attention to the industries, and then the best stocks in those industries go into the big watch list. Then I have what I call a now list. That's just narrowing this down to stocks that are setting up really well. Another list I have is Focus 40. These are the stocks I go to the most. This is basically these types of stocks, but the ones that have more than just technical analysis. So the ones that have strong revenue growth, strong earnings growth, strong institutional investing as well. And I've shown you guys this one before. I have this chart here where all, I don't go in and read the analyst reports. I just use my I think I actually have the wrong one up here. Oh no, I don't. Let's just pull up the stock. You can see here, this gives me a good idea of what the trends are related to some of the things we just talked about. So the Focus 40 has the best stocks of those. The reason is when you look at the yearly momentum leaders, they tend to be the ones with the strongest revenue, earnings growth, and institutional interest. So those are the stocks we really want to pay attention to for trends. All right. So from that, we have a bunch of stocks here that we're watching right now. Before we get to that, I want to talk about some of the setups. The market is at all-time highs, so that obviously means a lot of stocks are going to be at all-time highs. So we should be watching for a few things here related to the highs. These are essentially the setups we're looking for. You have these stocks that have been making runs like this, much like the market have. Many of them have pulled back here and are about to test all-time highs. And what we're looking for is when they break out, what kind of strength are they showing? You always want to look at on the breakout, are we seeing a pickup in volume? A good way to do that is this CMF indicator, money flow indicator. This basically tracks the relationship between price and volume. Notice here, Apple is weak right now, and that kind of confirms what we've been seeing in the trend here for Apple. And I like to see strength in that. I like to see strength in the volume and price action all confirming. Those are the ones where I'll trust the breakout more. And we're looking to play this to the long side. Now, another setup we look for is when we get the breakout, even if it runs a little bit, if we see maybe within a few days to a couple of weeks after the breakout, a pullback and a violation of that old high, that's actually a very good short setup. It doesn't mean the stock's going to completely fail or it's turning into a double top or anything like that, but there often will be a little flush that you can trade as a short before it gets back on trend and is going to move higher. So those are two things we're watching for related to the all-time high breakouts. Either you trade the breakout. The other thing is on trading the breakout. If it does pull back and doesn't violate the high but finds support in this range, that's a good long setup as well. So, and there are a lot of these right now. You can do this. The market, if it breaks out, you can do it with the market as well. But a lot of our momentum stocks we're watching are either close to this or have already done this. We're in Uber right now, and Uber recently had a high breakout, pulled back, didn't really violate the old high range. This is a box breakout we were trading, and then found support here in this range, and we traded alongside. Hasn't done much since. We're still in it, but it illustrates that concept in that setup here. Another setup we're trading is these stocks, and we're in the video right now. Stocks that have made strong runs haven't broke their high yet and are about somewhere between 5 and 15% away from their all-time high. You tend to see this float up to the all-time high in strong stocks, and that's the key here. Not in kind of junk stocks or stocks that are just moving from fad type of moves, but stocks that actually that are on our Focus 40 list, or a big tech stock that has strong revenue growth, strong earnings growth, and so on. They tend to float to that high. And you can look for those stocks that have strong trends, not at their highs yet, are consolidating, those are often getting ready to make a run to that high. So look for that setup as well. And of course, pullbacks and secondary moves, stocks that have made big runs have consolidated. And now you're looking for that secondary move, which is often stronger than that initial move. And we have a lot of stocks that made initial strong runs after essentially after the tariff bottom happened. And we've had these big runs. There's some consolidation now. Now we're looking for those secondary moves to play out. And a lot of these stocks are essentially some version of one of these things we just talked about. In terms of setups, we're looking to trade. And again, if you guys have any questions, you can post them in here. Lee, I do like steel stocks right now. We're in STLD. They did pull back a little harder than expected late in the week. I haven't looked at X specifically. Since we're looking at stocks now, let me pull up X and a few of the others you guys have asked about. I haven't paid attention to X too much, but this looks like there was some kind of, usually when you get these really almost unbelievable type of tight candles like this days in a row, that means there was some kind of buyout or something. And I have to check the news. I haven't been paying attention to this. If you know it, you can let me know. But this looks like something I'd probably stay away from this right now. All right, a few of the others you guys had asked about, TSM's Taiwan Semiconductor. This has been one of the stronger semiconductor stocks. This illustrates what we've been talking about to test highs. The all-time high is around 227, sitting at 209. I wouldn't enter it on this candle. I would look for one of two things. If it pulls back, where does it find support? If it very quickly recovers and closes above the 90 MA, I would play that kind of what we're talking about, that float to the highs, and you could get in maybe around 212 and target 227. CRCL, this is a stock I have not been paying attention to. No wonder, it's a recent IPO here. So it's very tricky trading IPOs before they get out of quiet period and their first earnings report. There's no news on the stock, and there is essentially no marketing or news allowed for the stock, meaning they haven't had earnings yet, and analysts can't cover the stock yet during quiet period. No news can come out. No analyst coverage, upgrades, downgrades. No white papers can come out on the stock. So there's very little news. So you tend to see it's just traders trading it, and a lot of these moves can't be trusted. If you see a classic, what I usually do is if the stock gets really extended and there's a good reversal candle, I'll short it. If there's a nice range and there's a breakout, I'll do a quick swing on it. But in terms of momentum moves, wait for that quiet period to end. That's usually 30 to 60 days after it IPOs or the first earnings. That's where you'll really start to get the trends, and you can play those momentum trends on these types of stocks. And actually, I don't have this one on my IPO list. I'm going to add it to my IPO list. All right, let's look at some of our other stocks here. Let's look at the AI and quantum computing stocks. That's Oklo, CEG, VST for power, QBTS, IONQ, CRWV. Let's start with Oklo. I've liked this stock a lot. We haven't entered it yet. We missed some of the strong entries, but a classic setup is forming now in Oklo. You can see here, broke the high here, tested the high, pulled back. We talked about that. Remember when we were talking about the market, that very common to test the high and pull back. Oklo did that, and then it broke the high. And this is very common as well. It breaks a high, then it will test the old high. And I would be watching this very closely. I wouldn't enter yet. You're kind of guessing. But if it starts to test this range and then you see some strong candles, that's what I would look for a potential entry here in Oklo. And that could set up the next big run. And we could use kind of a measured move target where the move to the high was essentially from 18 to 58, so like a 200% move. So 200 is a lot, but I wouldn't be hesitant if I was willing to hold this a little bit to even target 100 on this thing, like a 100 for essentially maybe an 80% move on this stock. So watch Oklo closely. CEG, can see here, this setup's a little different. The high here is at 358. It's sitting at 304 right now. I think it's a good entry where it is. I would put my stop under this range right here. VST, another one. You know, the one thing about SEG though, it is showing a little bit of distribution. I don't know why that is, because it's still been pretty strong. But maybe that's a little bit of a concern and why you would go to OCLO or maybe VST. And VST, another one. A lot of stocks are doing this right now. They're getting near the highs, and you can play that float to the high. Like here, maybe if it pulled back a little bit to 180, you could target 200 here for a really nice potential swing. So these are the energy plays, and then we have more of the pure plays for quantum computing. Here's QBTS, and you can see here this one broke its IPO high and is now testing here after a breakout here. It's been doing nothing for a while, but still overall very strong setup. I would be watching this one closely. And then IONQ, similar, hasn't broke its high yet. So we have, again, the potential for that high float, float up to the high. The high is around 55, sitting at 40 right now. And I think it's a decent entry where it is right now. Stop under the range, target at the old high here for IONQ. Then we have QRWV. And we can see here, I believe this is software related to these areas. And you can see here, this one's been on a huge run. Tough to enter it where it is right now. It's so extended. So I would watch for either a consolidation, then a breakout, or a pullback, and then showing strength on the pullback for a potential entry. A little extended where it is right now. That doesn't mean it can't go higher. It's just you're not getting a good risk reward when it's this extended. All right, let's look at a few more here, and then we'll get to our big tech review. I think we've went over a lot of these in the past ones, and if you're a report member, we go through these ones every day. Let's go over Carvana. I really like this one. This one obviously has been a very, what's the ticker? CVNA. You can see here, this has been a very strong stock, broke its high here, made the run, and this is exactly what we've been talking about, right? They often will make the runs, then they pull back to the old high, and the question is, does it fail or does it hold that level? Carvana is holding that level. And then you can see the strength here. I like it where it is at the 90 MA, maybe a little extended. But if on Monday or Tuesday, it's still around this range here, I definitely think Carvana is an entry. Then App has been a very strong stock that pulled back hard. You can see here overall the trend is very strong. It's had good, very strong revenue and earnings growth. You can see all the accumulation here. A little bit of distribution in here related to a gap down in earnings, but found a lot of strength, and the CMF indicator has stayed above the zero line, which is a good thing. Now pulling back and testing the 50-day moving average, I would not enter here. But if it showed strength here and maybe put in a bullish engulfing or started to bounce and got up over the 90 MA, I think App would be a very good candidate for an entry. Let's do one more here. Let's do Shack. A little different area. We've been looking at tech. The fast casual restaurants have been doing well, and restaurants in general. This is another one. Float to highs. The high is around 140, sitting at 133. Broke the range here. Let's say to get a little better risk, let's say tomorrow, or not, Monday or Tuesday, it was to pull back to say 131. You can place your stop under the 90 MA around 127. That would be risking 3 or 4 points, and then targeting 140. That would give you 2 to 1, risking essentially $1 to win 2. Or you could even play the actual all-time high here. Well, that is all-time high. So I probably wouldn't play for a breakout because it could find some resistance there. All right, so a lot of good stocks to potentially trade. Rocket Lab and PLTR, Axon, related to defense as well, and other things, but defense as well. I'm watching those very closely. And closely related is cybersecurity, and cyber is strong as well. Let's do a quick big tech review, and then we'll get out of here. And you guys know I run the swing trading service. You can do a 14-day free trial if you go to bullsonwallstreet.com swing trading. And then we'll do Q&A. You guys have asked some great questions here. Check out the article on the Bulls on Wall Street blog, 50 tips. I think I've mentioned this one last time too. And then on my own side, Paul J. Singh, I'm going to post another article this weekend. And the last article was on books related to AI. I think it's really important to get a good understanding of AI, not just for trading, but just for using it. And there's a lot of good books related to that. And then I'm going to do an article related to fundamental analysis over the weekend. So keep an eye out for that. Let's do our big tech review. We review big tech every day. Obviously, they're important stocks. We're in Amazon right now. I like it over the 50-day, over the 200-day moving average. Still think it's a good entry where it is right now. Someone wanted to ask about Tesla. I like it here. We had the kind of Elon versus Trump meltdown here. This was a very big candle. When this happened, we talked about this potentially being an overreaction, which it ended up being the low for the pullback. It's been consolidating here. I like it here, and I do think it's going to go higher. The tricky thing is when you enter a consolidation like this, could be consolidating for a while. So you could enter here if you don't care about time frames. If you do care about time frames, wait for a break of this range, and then you'll know the stock is ready to move. NVIDIA, we talked about this one. We're in NVIDIA playing the float to the high. I like AMD a lot, and this has been one of the worst semiconductor stocks over the last year. You can see it made a high in 2024, and it's basically been a downtrend since, but essentially has bottomed out here, capitulation event in April. Then look at all this good volume. It hasn't had volume like this since going back to 2023, early 2024. So obviously buyers, institutional buyers are coming in, broke the downtrend, and then broke the 200-day moving average. So I think it's in a really good spot here. Very good risk reward. You could enter here, place a stop under the 200-day moving average, basically risking 5 or 6 points. And if you're targeting this high here at 174, you're basically risking 5 points for about 40 points. So amazing risk reward with AMD. Microsoft needs to pull back some. Apple is stay away right now. Google is stay away right now as well and failed the 200-day moving average. Meta, very strong here, just looking for a good entry signal. We don't have it yet. Same goes for Netflix. Really strong stock. Actually kind of has put in an entry signal. It's just so extended. It's tough to enter here, but we're watching Meta and Netflix very closely. But I would say the ones that I like the best right now are AMD, NVIDIA, and surprisingly Tesla, because we've been staying away from it for a while. But I really like the action after the recent hard pullback, and then Amazon as well. All right, guys. Let's thanks for attending. Great questions as usual. Simon's asking, when is the next Stocks and Coffee? I don't have a set schedule for them. I usually do 2 to 3 a month. I'm not sure if I'm going to do next week yet, but if you're on the email list, you'll get an email for it, and I'll post it on X as well. All right, guys. I will see you in either next week or the week after. And of course, if you guys are swing members, I will see you guys on Monday. Talk soon.